especially about tanker shipping and about oil prices. And at one of our recent meetings, we talked about what does it actually mean that when the oil price goes below zero. And that sort of spurred a bit of discussion in terms of how does all this oil price work, and in the middle of a crisis, and it just seems, at least for basic people like myself, a bit unclear. So we thought it would be nice to have a conversation where, and I want to stress it's a conversation. So where Christian and Jesper, they will be introduced very shortly, will share some of their insights in response to our questions. Our questions is definitely from myself and Johan, who will join me as interviewer, but we also hope and very much encourage that you are asking your questions. The more interactive, the more like imitating you visiting your grandparents or whoever you're drinking coffee with normally, I think the more engaging and active it will be. So again, we really encourage your questions. I can see you all muted right now. Keep it that way until you have questions. When you have questions, please either unmute yourself or raise your hand, and or type it in the chat box if you prefer that. Johan and I will keep an eye on that. So that's a bit of the background. We hope you'll have a fun and engaging morning. I myself am Pernille. I'm part of the DAPS board of directors. And I'm joined today, as you can see, with a lot of you, and also with Johan Bergendorf as viewer. Then we have Christian and Jesper. We'll do a very short introduction round of the four of us. Then we would like to capture your expectations to the morning. Christian and Jesper will do a short presentation, and then we'll go into the questions. I think, like, shoot your questions whenever they are there. They're typically more relevant when you get them than by the end. So just chip in as much as you can. I'm working for PSA very shortly. I'm working in finance and transformation. And I guess my role here today is to show my curious side. So I'm good at asking questions, especially when I don't understand things. So that's pretty much most of the time. So I'll try to get some clarification on all the things that to me is quite blurred on this subject. Over to you, Johan.
Thank you. Good morning, everybody. It's wonderful to see you, and I hope you got your coffee ready. I'm part of DAPS as well. Very briefly about myself. Exactly 10 years ago, in June 2010, I went abroad for the first time. And I moved to London on what was supposed to be 2 years. But you know what happened? You come to a big city, fall in love with the city, and fast forward 10 years, I'm still abroad and I still love it. My background is as an M&A corporate finance advisor for many years, then as an investor, and then as a business manager and operator. And among other things, I've been running a US publicly traded company for some years. Back in the days when I was young, my master thesis was about oil derivatives and hedging, but I'm by no means an expert, and I know very little about it by now. When I was younger, I invested in a shipping company, into a ship, and I got firsthand knowledge and experience in terms of the volatility in the good times and the bad times. In the good times, you can make bucket loads of money, and in the bad times, you can lose money left, right, and center. And I'm very pleased to be part of this discussion and learn more from our panel guests. And let's pass it over to you, Casper.
I guess Christian, but
Christian, sorry.
Christian Jasper here. I have about 20 years of experience in the oil tanker industry. So of course, this is a topic very close to what I do day to day, and I've been doing throughout my career. I have been in Singapore for the past 10 years, and is currently commercial director for Maersk Tankers, with responsibility for the APEC region. Jesper?
And good morning. My name is Jesper Klaup, and I've been in Singapore for the last just over 8 years. I've worked in the product tanker space for pretty close to 20 years as well for various owners. And for the last 6 months, I've been working for a regional player here in Asia called BTS Tankers, which is where I'm now. I'm looking forward to having a nice discussion with you guys, and let's pick it up from there. Pernille?
Thank you very much. Line, it looks like you need to enable my share screen. Line?
Okay. While we're checking that, it would be good to touch base with the audience to understand your expectations a little bit better. So if there's anybody who has any thoughts about you hope to achieve and learn in this session, please let us know.
Is it possible now, Pernille?
Yep, thank you. Any expectations? Otherwise, we'll just go ahead and then we'll fulfill our own expectations. I should also mention that we are recording this session. So obviously, if you're not in agreement with that, you're more than, or you're free to leave. We will make the recording available afterwards on DAPS as well. Okay. Then I guess over to you, Christian. Just tell me whenever I should change the slide, and I guess you and Jesper will give some insights.
Yeah. So just to and you can go to the first slide, please. Just to set the scene for the discussion. So a few slides, just giving a bit of background on the oil, on the development of consumption and oil price, and what happened recently as a tee up for the hopefully discussion we're going to have afterwards. I think we have been through this, Pernille, so please skip to. So if we look at the first slide here, which is really showing the oil consumption and oil price, as you'll see here, despite there are certain trends, of course, on reducing carbon footprint, then as the world population is growing and economies around the world are growing, the need for energy to feed the populations and economies are also still growing. And thus, we'll see that the global oil consumption is continuously growing, although it has flattened out a little bit lately. But essentially, today's oil consumption is around 100 million barrels of crude per day. And for now, we, although there will likely be a reduction this year due to the COVID, then for now it seems that the trend will continue. If we look at the oil price, then the oil price is, of course, a function of supply and demand, and particularly the cost of production as well. So while it has been over the past 10 years, I've taken data back from 2005, and you'll notice it has generally been hovering somewhere between between $60 and $80 until 2015. So there are two events here that are worth mentioning. The first in 2008. I don't think that requires any further introduction, with a global financial crisis that caused a huge drop of oil price, but also from a record high level of around $160 per barrel. Then again in 2015, you see a noticeable drop again. That was really because of a price war between the OPEC and the US at these high levels around the $100. It was profitable for the US to enhance all the shale production and the various means of production in the US and Canada, for that matter. And OPEC started a price war to reduce the US production. They didn't succeed. The US is today, while it's the biggest consumer in the world, it's also the biggest producer of oil with about 12 million barrels per day. As comparison, Saudi is normally just a tad below 10, and currently a little bit lower. Yeah, I think we can jump to the next one. So here there are two things to show here. So first of all, the major usage of oil is really transportation. So around 63% of oil is used for transportation, whereas gasoline for cars is the majority. Secondly, you have gas oil or other diesel oils that are used for trucking and other industrial transportation means, and of course jet fuel for the air industry. So since transportation is account for almost 2/3 of the oil consumption, it is of course also super sensitive to any changes in the demand for transportation. So on the right hand side, you'll see the relation between what does it mean if the demand for transportation drops compared to or relative to the drop in oil consumption at the same time in crude oil. And that is of course relevant because the picture I'm showing here is really what was expected back in March, April and when the COVID started to become a global event and was called a pandemic, then this was really the picture the world was looking at. We were looking at a up to 50% reduction of gasoline and the other transportation fuels, which would mean that a 30% reduction in oil demand. But we'll come back to that. If we go on the
question, you say that 63% is for transportation, but the fuel oil, that's also for transportation, right?
It can be for fuel oil or for power generation in power plants.
Ah, okay. Thanks for that clarification.
Yeah. So if we go to the next slide. So here to illustrate, so we basically had two events or two shocks happening at the same time in the world. So we had significant demand destruction due to COVID, primarily for the refined products, but obviously as shown on the previous slide, that is directly related to crude. Plus we had a war going on, a price war within the OPEC and particularly between Saudi and Russia. So what I've tried to illustrate here is really looking at the Middle East crude loadings for VLCCs. And as you can see that while it's normally just a tad above 80 million barrels per day, in March and particularly in April, it jumped to almost 22 million barrels per day, i.e. Saudi Arabia started to flood the market with cheap crude oil. At the same time, the demand for the refined products came to a halt because of COVID. In the US, the driving in normal cars activities came to basically 50%. So the demand for gasoline went down to about 50%. And then those two events combined meant that the oil price collapsed. And the main driver for this was was the collapse in demand. So even a little increase in the supply versus a lower price meant that the oil price collapsed down to, well, Brent was hovering somewhere between $15 and $25. And in the US, we saw the WTI even come to negative territory. So those were little information just to set the scene and give a few facts on the recent development, and hopefully we can have an active conversation from here.
Question, just a quick question. Looking at the slide here, I can see Brent and WTI are tagging along all the way, and suddenly there's a big deviation. Can you explain the differences between WTI and Brent?
And maybe also for some of us, just explain what exactly is the difference between WTI and Brent.
Exactly.
So those two are really just benchmarks for the oil price in the various regions. So in Europe, it's typically the benchmark price is the Brent, which is essentially North Sea oil, whereas the WTI is the American benchmark. It stands for West Texas Intermediate, which is basically a benchmark for what is the cost of a barrel of oil in Cushing, Oklahoma, inland the United States. So of course they will correlate because essentially it is they are both benchmarks for oil, although the type of oil is different. I will not get into that, then it becomes very technical.
But then somehow I missed the why does the WTI all of a sudden go below zero? And I guess that's also the topic of today, right? That what does it mean that the oil price is below zero? And how can, I guess that oil is a bit like the financial markets, that you can buy it wherever you want to. So such a big price discrepancy should lead to some kind of arbitrage.
Yeah. So what should be noted here is that the negative price for WTI was basically only for one day. The more normal contracts for WTI were closer to Brent throughout the period. But it was very unusual. The WTI was trending down to minus $37 for a single day. Basically, what it means is that the traders, they buy oil on forward dates. And in the US under, Siri is interrupting me now. Either she's correcting me or she's applauding me, I'm not sure.
She's learning from you.
Yeah, probably. Yeah, so
it was one day.
On future contracts under WTI, it's basically a contract for taking physical delivery of oil in Cushing, Oklahoma. So what happened here as storage of crude oil was basically completely filled in the US. Cushing is an inland place, so you cannot ship it on, or you cannot load it on ships very fast. You need to move it through pipelines to the US Gulf Coast. And as we were getting closer to the date where the traders had to take physical delivery of the oil, sorry, not cargo. It is always cargo for me, but in this case it's simply oil. They were in a situation that due to all the uncertainty because of COVID, oil price was plummeting. There was no storage available in Oklahoma. So they were actually forced to pay people to take over the oil, to take physically delivery of the oil. So a very, very unusual situation. And as I said, it was only for one day. It was trending in negative pricing. Then it came back to to normal.
Do we know how many people actually manage to get money for receiving oil?
No, I don't.
Okay. Okay. I mean, I just discussed with my daughter last night, and she was like, "Why did you buy a lot of oil that day? Because then we could have become rich." But I guess then that would lead to another problem in terms of the storage or something, wouldn't it?
Yes.
Yes, at least during that period, you would have had problems storing the oil that you took delivery of.
So the people who then take delivery, they do they have the storage ready, or are they then stuck somehow with all that oil that that they got for negative price?
So then what happens is that a situation of contango basically developed, right, where you have a current physical price that is considerably lower than what you think that you can get for it in the future. And even as demand overall for oil was coming down due to COVID-19, you still saw a trading opportunity among oil majors, trading companies across the world that figure you go in, you buy cheap oil, you can flip that position at a later stage and you're almost certain to make money. Of course, you need somewhere to store it, and that's where the ships come into the picture.
So you're both in the shipping or the tanker shipping industry. And in general, I guess what we've seen for shipping, I'm also from shipping, but the container side, and we have not exactly been excited about the COVID crisis. It has caused a lot of revenue loss. But it seems that for the tanker shipping, the dynamics have been somewhat different. Can you tell us a bit about that?
Well, yes. So basically, the driver for this was that contango play that was possible to do if you are an oil trader or an oil major. So oil gets traded extremely cheap against a expectation of a much higher future price, which allows you to store the oil inside a tanker for X amount of time at whatever daily cost that may be. And of course, on the back of that, there was if you have Cushing with the capacity of about 62, 65 million barrels running dry on storage, then all of a sudden there is a massive run on first the really big oil tankers, and then later it kind of trickled down to other sizes as well, and created a huge demand for shipping storage. And then on top of that, product starts to move around as well out of refineries where everything was changing on a daily basis. There was not a fixed demand, so a lot of very typical trade routes changed. Everything became, the logistics got very interrupted, and it just created a larger transportation demand. Not necessarily a demand for the oil physically, but the tanker transportation industry doesn't really care about it. As long as there is a demand for the transportation, then our freight rates increase. And that's what happened.
Fascinating. And in terms of freight rate, how much did it went from and to? What sort of magnitude did you see of uplift? So
on the biggest ships, the VLCCs, they started the year at around $130,000, $140,000 a day in earnings, and that dropped to about $14,000 a day. And then in a matter of very short time, it went to about $250,000, $300,000 a day in terms of earnings. On the largest product tankers, I think the earnings went as high as $175,000, $180,000 per day. So versus a market that's typically hovering somewhere between 20 and 40,000. I believe, Christian, you are a little bit more entrenched in that market, but I think The freight rates have been historically high for this relatively short time span, but it's been a pretty crazy run.
So just to summarize what you're saying, it fell off a cliff, and we're talking 80-90% discount certainly, and then it went 15 to 20 times higher on increased demand.
That's correct.
Wow. Yeah.
Sounds like it's the year of your life.
Yeah, well, it was, what would you say, Christian, the 8 weeks of our lives?
8 weeks of our life, true. And I think, Jesper, you could previously call it a generational event. So possibly something every generation will only experience once. So maybe I should simply just retire now. Now we have tried it. Yeah.
We have a question here from the audience. So looking at the change dynamics in the oil markets, do you think that there will be more volatility in the oil prices in the future?
Yes, oil is always volatile. Again, it's oil is depending on of course, at the end of the day, supply and demand. But of course, you never see any swings in the oil price without there's some kind of geopolitical agenda behind. The Middle East, while they have the cheapest production of oil, some places in Saudi it's below $10 to produce a barrel of oil. Then the sovereign budget also needs a fairly high oil price to actually break even. So the Middle Eastern countries need a break even on the oil for their national budgets to break even. They need oil price of somewhere between $50 and up to $85 in Saudi Arabia. So of course OPEC will continue to play an important role in trying to secure these levels for national interest. On the other side, then the market is influenced by a lot of events. It could be COVID. It could be single influencers who are simply tweeting at 3 a.m. That would have impact on the oil price as well. I think oil is here to stay for the foreseeable future. Although in my case, and Jesper's case as an industry, we should work hard on coming up with more environmental friendly solutions to what we're doing now. But as the first graph showed, the daily demand for oil is still increasing as the world population is getting bigger. We still have a number of undeveloped countries in the world who will simply need oil as energy to feed their needs. Oil is here to stay, and thus the volatility is also here to stay.
In terms of the global shipping market, we see a lot of geopolitical instability in terms of US-China relationship. We got COVID-19, disrupted supply chains that might be more regional than global. What do you think is going to happen in the future?
That's for you, Jesper.
Thanks. That's a really good question, right? If we knew for sure, then it would be a lot easier. I think that eventually there will be some kind of a solution to this schism there is between China and the United States. I think a lot of it is driven by who is currently occupying the White House. And now we don't know what's going to happen at the election at the back end of the year. But if the current regime continues, then I think there's a very good chance that we're going to experience tension between the Chinese and the Americans for a little bit longer. I think a lot of the tension is driven by a political agenda that goes towards a re-election. But at the same token, if a more traditional politician takes over, then I suspect that we are going to see a more normal relationship between the countries. I think it's in everybody's interest to have bilateral trade between the United States and China going forward.
Following up on this question, we see things happening in Hong Kong, and Hong Kong is changing rapidly. For us living in Singapore, how do you think that's going to affect us in terms of we're going to see increased trade running through Singapore and less through Hong Kong, or how do you see the world developing here?
Christian, what do you think?
I don't think it on the oil side, which is the topic today. I don't think it will have any impact. If you look at the oil hubs of the world, it's for trading. It's of course New York, it's London, Geneva, Dubai is getting there, and Singapore. Hong Kong is a very important place for shipping as a whole, but typically more for container lines, for dry bulk operators, and owners, sorry. But it's not really a hub in the oil industry. There are only a few oil companies in Hong Kong. Obviously, the consumption is fairly small in that country, whereas China is somewhat different. So for oil or oil trading or oil shipping, I don't think there will be a big impact from that.
Continuing on those sort of a little bit broader outside of shipping question, Vicky has asked I think quite interesting question here, whether the oil price has any impact on the interest rates. So will the oil price result in lower interest, or the oil price drop, will that result in lower interest rates? And maybe actually we should ask you the other way around. Does the interest rate impact the oil price?
No, it's not a significant factor. Oil price is, of course, as we talked about previously, supply demand, geopolitical issues, cost of production. So there are various thresholds for break even in the production cost for producing oil. Cheap in the Middle East, expensive in deep water, expensive certain places in the US and so forth. So the price will always recalibrate once it gets too much out of sync. If it gets too low, production will stop in certain places and thereby drive the price up, and vice versa. If we look at the prices, so instead of talking directly about interest rate, I think we can also talk about, so what does it mean for the consumers? So oil, the price of oil, if we look at gasoline in our local petrol store, the price of oil is of course the most significant factor in that, or component of the price. But on top of that, you still have the refining costs, which are standing on their own. It will still cost whatever to refine a ton of or a barrel of oil, irrespective of the actual oil price. You will have taxation. So in Singapore, about 50 to 60 cents of a liter of petrol is taxes. So that will be a factor. In Denmark, we know sadly it will be around 70% of the price for a liter of gasoline is taxes. And thus in Denmark, you don't see any big swings in the price of gasoline when you go to the retailer to fill your car, compared to or relative to the swings in oil price.
So basically, what you're saying is that the impact of this unusual developments from a private perspective does not really have any major impact. I mean, I noticed that you said that about 2/3 of the oil is used for transportation. So you would think that maybe out here we're not spending a lot of oil on heating, but we do that in Denmark, and definitely we're using a lot of oil on transportation. But we don't really have any impact, or is there some other impact on our personal lives? Will we see some changes?
So the relations between the various components from oil or refined products is of course fairly complex, and the returns of producing gasoline versus jet fuel is different. So the refiners will have different margins on those. Although you cannot switch a refinery to just produce what you want to, there will always be a certain output of refined products from the crude oil. Now I forgot your question.
It was the impact on us as individual persons.
Yes,
yes. Should we celebrate or should we not?
No, so you will still, although the demand appeared to be dropping following COVID, then we can also see that there is a rebound going on already. So flights in China are starting to resume. So let me just clarify one thing. So when you saw the oil price drop, and particularly the demand drop for refined products, for obvious reasons, jet fuel used in the aviation industry was hit the hardest. After that was gasoline, and then diesel was actually relatively stable despite of the possible demand destruction. But obviously jet fuel was the worst hit, and thereafter gasoline or petrol, as it's called here, for driving cars. What we're already seeing now is that although most of the world is in lockdown, and particularly the aviation industry is hit hard with very few flights, we can see in certain places they are actually starting to commence flights again. So China, domestic flights in China are not back to normal, but we're getting closer to. Korea have also started both domestic and some international flights. So there are various statistics for that, but you can see there's some improvement there. Particularly for the driving for cars, what we can see is, and this data is easily available from Apple and Google, where you can go in and look at traffic congestion in major US cities. And although the last 2 weeks in the US have been influenced by first Memorial Day weekend, and secondly there is a curfew, and there are curfews imposed in many places in the US, which is of course having an impact on driving as well. But in the US you can see in these major cities, based on traffic congestion data, that they are starting to come back up to normal driving patterns. It's not quite there yet, but it's getting closer and closer, and it's a clear trend that they are starting to drive again. We'll probably see the same in Europe, particularly over the summer, and of course other places in the world are hit badly by COVID right now. So my point here is that we are probably getting gradually back to a more normal environment, and thus prices will also normalize over the coming months.
Good. We have one question from Vicky here. Oh, sorry, was there any follow-up questions to Christian? Okay, the question from Vicky is, oh, sorry, go ahead. No, okay. The question is whether you can quote any oil companies listed in the Singapore Stock Exchange. And the question follows, I presume the share price of these companies are quite low now, and your comments, and I believe it's in terms of whether that's a good or bad time to buy.
I would say I wouldn't want to recommend on that, but obviously I don't know if they're listed in Singapore per se, but most of the known major oil companies, ExxonMobil, Chevron, Shell, are stock listed, and without knowing the exact situation today, I know that all of these have, of course, suffered on the stock exchange because their earnings have deteriorated as the oil price has. So from a historical perspective, I suppose the rates or the share prices looks pretty attractive currently.
Okay, I think
yeah, I have a question.
Katja had a question first, and then we go to you, Morten.
Yeah, not me, Martin.
Martin,
that is
sorry.
husband. First, so my background is also 20 years in various shipping companies, including a Norwegian shipbroker now. And to follow up on Christian Jesper's, the impact for the private households, I think I support that most of the gasoline price is taxes. So no, you will not really see it there. But in terms of the extra taxes when you fly, in terms of, for example, the gasoline used for trucking companies, if they have an increased gasoline price, they will increase the price on their goods, and that's goods that you're buying. So it's sort of pretty much hidden what effect it has to the private households. But of course, a higher oil price will affect in tons of ways, and not only the price of the gasoline. The other comment is that when I spoke to friends outside shipping and tried to explain what happened the last 3 months in shipping, I think it was two events: the political issue between Russia, US, and Saudi. So Saudi decided we dump the price and we overflow the market with oil. Roughly at the same time, this COVID-19 started, so all planes ground in the world. So you have a product where there's no need, oil basically, at least jet fuel and gasoline. And at the same time, you have the Saudis just pushing it out. I mean, normally if there's no demand for your product, what would you do? You would stop production. So that first, all the oil stocks, you also heard Trump saying, oh, we will fill up the national reserves because the oil is cheap now. We buy it from Saudi. And when all stocks in the world were filled up, then it went over to tankers. So you have a product which has no need, but because there's no need, ships cannot discharge the oil because the short tank, for example, in the airport, have no longer space for the jet fuel because the planes are not flying. So that's suddenly where we hit, as Jesper and Christian said, the highest level of shipping prices ever. End comment.
Thanks a lot for that elaboration. Much appreciated. Morten, and what do you? Morten Bryde.
Okay, thank you, Christian and Jesper. Thank you very much. Excellent, very interesting. Myself, I'm selling antidepressants if you need. But anyway, two questions. You might have said it and I might not be listening, but what is the production cost of oil of the shale in the US? I mean, how low can they go long term? And then my other question is, you seem a little bullish on a higher oil price in the future. And my argument is that why should it be much higher? Because yeah, consumption will pick up, but it's never going to go back to where it was because electrification or whatever it's called is going to continue, and there's going to be a push to other energy sources. So you're never going to get back to 100. Plus, you have these states you mentioned, like Saudi, who needs a high price or a high revenue to finance their budget. So I mean, are you really bullish that the oil price is going to go back to north of 50 or close to 100 or in that range in the future, and why?
I think that the word was volatility. I agree with you that it's most likely not going to go to $100. I still think that we're going to see higher levels than where we are at now, which is just shy of $40, whether it's Brent or WTI. Obviously, you are seeing countries like Saudi Arabia, they are trying to diversify their economy. So they are seeing the same thing as you are alluding to here. The economy there has been extremely one-dimensional since they discovered the oil reserves. And they are now trying to branch out into also other parts in the supply chain, such as chemical production, which basically derives from crude in one way or the other as well, when it's all broken down, and that should diversify their economy. And I'm sure that is in an anticipation that they're not going to be able to run on a $85 a barrel break even. That's not sustainable in the long run. I'm with Christian. I do think that we're going to have volatility, but maybe it just means that the floor is going to be a little bit lower than we have been used to so far.
Well, what's the cost price in the US to produce?
It's very different, but so it's somewhere from around $40 up to the 60s. I think following 2015, a lot of the more expensive or some of the producers with high cost are out of the picture now. So it's probably somewhat lower than it was, but where exactly it is, I do not know. But my guess would be, as an average for the shale, 50, 55, maybe 45.
Because it's difficult to be much lower than that for a long period of time for the years for the producers, right?
Yes.
So
sorry.
Yeah, it's just that they cannot produce year on year on year at the cost. So.
No, and one of the data that is first, or one of the things that are first impacted, where you can find easily accessible data, is really how many oil rigs are in action in the US, and that count you'll see is really sensitive to oil price volatility. I'm not saying that after a week they will stop producing, but it's not far off, and that's a data point where you can see that as soon as the oil is dropping or trending down for a longer period, then they simply stop producing in the US. Certain rigs are simply taking out.
Thank you.
We have a question also from Henrik Timmerud. When the market moves towards potentially using ships as floating storage, as was the case recently, how do owners react to that? I.e., is it just as good to have vessels be floating storage as it is to have them tramping from A to B?
We are clapping our hands like there's no tomorrow when that happens. Because there are many reasons for that. And first of all, typically you can secure reasonable or decent returns by doing that. And at the same time, it's of course also taking supply out of the market. So you also strengthen the market and helping your other ships at the same time, or the market as a general. So as a shipping company, we really like that when it happens. I'm trying to really hold my excitement down right now. Okay. Yes, but anything to add on that?
What he said. Pretty much.
we're slowly up on the clock. Okay, Jesper and Christian, thank you for a fantastic presentation and for being our expert panel. I think this coffee table discussion has been extremely fruitful, and you've really enriches us. So we know more now. I think we just take one last round between Pernille, you and Jesper and Christian and me, just to round off and touch upon the one thing we learned today before we say Happy Friday. Over to you, Pernille.
Well,
What's the one thing you learned today?
I've learned a lot, and thanks a lot, Christian and Jesper. I think one thing that I will definitely remember is really basic, but what is the difference between Brent and WTI? I know that. I now know that WTI is Western Texas something, and the other one is a different region of the globe. So thanks for that clarification, and not least for all the other much more insightful considerations.
It's really been awesome. The one thing I remember for today is that when prices goes negative, it could be as a consequence of it's actually physical delivery in the middle of nowhere in US. And if that happens and there's no storage capacity and there's no available transportation, well, then people have some problem and prices can drop to sub-zero. But it's been extremely useful today. Christian and Jesper, is there anything you want to round up with?
No, just thanks for being an interactive audience. It was a pleasure.
Yeah, I can only second that. Great with a lot of questions, making it and comments to make it a more interactive session. Pleasure.
Stine, over to you. Do you want to say anything about DApps before we say Happy Friday?
I do. So yeah, thank you all for joining this morning. It's been an absolute pleasure to have you all. So I just wanted to highlight a couple of events that we've got coming up within DApps. So the first one is next week on the 11th of June on virtual leadership, where we have a focus on leading with authority and empathy, when we basically work leading from a distance, and that's Heather Hansen who'll be holding that for us. Thank you, Heather. And then we've also got one on executive loneliness on the 1st of July at 8 AM as well. So senior executives, they carry a lot of weight on their shoulders, and even more so now that we're all kind of locked in our homes. But who's looking after these senior executives? So we've got Nick Johnson joining us to help us raise awareness of this loneliness for senior management. We are also working on a program to kind of continue throughout the summer. So it does seem like we might not quite be leaving for a summer holiday, any of us. So in DApps, we've decided we're going to continue our efforts throughout June, July, and August as well. So there's a program coming up with some business lectures, and as soon as that's confirmed, it will be, of course, sent out. But thank you so much for joining today. Have a pleasant Friday and a great weekend. Thank you so much.
Thank you.
Thank you.